It's Thursday, April 11th. Welcome to Market Foolery. I'm Matt Greer, and joining me in studio, we have Motley Fool analysts Andy Cross and Ron Gross. Gentlemen, welcome. How are we doing?
Hey, Matt.
How are you, sir?
Thanks for having us.
I'm good. Good to have you here. We have lots to talk about. We've got, well, Jeff Bezos out with his annual letter, and he is talking some smack.
It's good stuff.
It is good stuff. We'll get to that. We've got some more Tesla news involving their big Gigafactory in Nevada. And
not as big as maybe yesterday.
Not as big. Gigafactory 1. And guys, and I want to give our listeners fair warning, we're going to talk about an incredibly disturbing story. Of course, we're talking about the prequel to the movie Grease. Yes, they are talking about making a prequel.
Disturbing.
So many thoughts, so many things
awesome.
to say. I'll save it.
It's so wrong on so many levels.
Or so right.
I don't think
We'll get into it.
Okay. Tell me more. Okay, so let's begin, though, with a big IPO. PagerDuty went public on Thursday, and shares were up more than 60%. Now, Ron, this is a software company with a really, really bad name. Let's just establish that. It is unfortunate. So what exactly is PagerDuty, and why the excitement here?
So as a Motley Fool's tech expert, I think this is certainly appropriate for me to answer.
Perfect.
Thank you for coming to me. I appreciate it.
Sarcasm.
So it's a software company that basically it absorbs the signals from all the software that your company is throwing out there, whether you use Slack or Okta or all the different software systems
That's a lot of signals.
your company. That's a lot of signals. They interpret it. They decide if any action is needed, if there's anything going wrong, any glitches, any problems, and then they'll send that information to the appropriate person in the organization so the problem can be resolved. Makes perfect sense. Lots of companies need software such as this. They are not the only people in the world that do it. Atlassian, Splunk have a presence in the space as well. But they have some great clients. They are growing really quickly, and there's a lot of excitement around the company and its growth, and that's why you see the stock really pop on its first day of trading.
Yeah, they went public at $24 a share. As we're talking, it's up at around $39. So a really nice first day for PagerDuty. It's a pretty interesting business. I've been digging through the S1, which is the public filing when you announce that you're going to go public. They specialize in this on-call management. So like Ron said, they call it incident response. So like they're really the software layer in there trying to monitor what's happening from all the digital signals that Ron mentioned, and then help the companies make sense of it. It's built by developers, it was founded by developers who used to be at Amazon. The CTO and co-founder Alex Solomon owns more than 7% of the stock. Its CEO and co-chairwoman Jennifer Tejeda, she owns more than 6% of the stock, so a really nice day for them. It's very heavily venture capital backed. Obviously, as a lot of these companies are. It does more than $100 million in revenue, and now maybe the market cap is up near $3 billion, so kind of around there. So a nice day for a company that's pretty interesting, and like Ron said, like competes with Atlassian and has more than 11,000 clients, including a third of the Fortune 500. So it's playing in a really big space with a lot of excitement now.
Estimated $25 billion potential market that these companies are selling into. Company's not profitable, but it's only they're losing only, I want to say only around 40 million or so last year. That's not actually a big loss. They probably with just a little bit of growth could turn profitable, which one would hope with the $3 billion valuation.
Well, yeah, and they spend significant amount of dollars on research and development, north of 30%, which is exceptional. And they're built. It's really a developing platform. I mean, they have more than 350,000 people who are tied into their paid clients who are tied into their platform, and they're developers, and it's really trying to play and provide solutions in this developer and operations, a DevOps space that allows these companies to collaborate and work closer together. That's a really hot space right now that investors and engineers are looking at.
And guys, let's pull the lens back, because probably a good reminder here that the first day IPO pop, well, that's not how it always plays out. We have Lyft, which went public in late March, so just a few weeks ago, and it had a nice first day. Shares hit a high of around $88, and now they trade around $61, a new all-time low, well below the IPO price. Does Lyft and that IPO experience give us any caution, or does it tell us anything about PagerDuty?
Yes. Well, it tells you a lot about IPOs in general, which are all stock pricing, in fact, is based on the supply and the demand of the stock. And sometimes the demand for an IPO gets a little bit out of whack with the realities of the business and the fundamentals of the business. And sometimes, it's a case-by-case basis. I'm not saying that's the case here with PagerDuty. If I was the CEO of a company and I found out that my investment bankers underpriced me by 50%, I might be a little bit angry about that, actually, because I would want to capture more of that cash in the actual IPO price than just in the aftermarket. So just be careful. Sometimes the demand is a little bit too hyped. IPOs are somewhat hot right now. There's no real rush, especially for long-term investors. Nothing you feel like you're going to have to miss out on. It's fine to just watch a company and learn about it.
Yeah, somewhat hot. Like they're smoking right now. I mean, like Lyft's performance was kind of a drag, but there's a lot of excitement in the IPO market right now. And PagerDuty is one of these cloud-based companies that came out. Ron's right. Like, if you're one of the companies and saying, wow, gosh, there's a little bit of money we left on the table. So it's a fine line in how they kind of price these. And actually, PagerDuty was originally priced at somewhere in the below $20, I think 19 to 20, and they ended up going at 24. And now the stock was, up near in the high 30s. So a kind of fine line in how you think about that. That's where you have to be a little bit careful when you're investing, because not all your stocks, your IPOs, when they come out public on day one, they're going to go up 60%.
Okay, guys. Well, we were talking before the story about, and before we came on air, about how bad the name is. So as we wrap up here, I've got to ask you, what's the worst part of the name? Is it the pager or is it the duty? Because I genuinely don't know. I think they're both so bad. If you could only replace one of those words, what are you replacing? I
would have to replace pager, to be honest with you, because it's just such an old connotation. Duty is fine. It's doing double duty. It's working overtime. Okay. It's doing what it does. I don't know what pager is about.
Okay, Andy?
I would change the second part of the name.
The
duty name.
Okay, fair enough.
And I'm going to leave it out there. I'm just going to let that float out there right there.
Yeah. I'm
also a character, by the way, in Greece. Oh, duty.
Nice.
Yes. Just bringing it full circle.
Nice. Yeah. Teasing our final story. Ron Gross. Yeah, I'm getting rid of the pager. I'm with you, Ron. Shares of Tesla down on reports that Tesla and partner Panasonic have suspended their investment in the expansion of the Giga 1 factory. Now, that's Tesla's ginormous factory in Nevada where they make the lithium-ion batteries. Guys, what does this mean for investors?
Well, so let me get this straight. So they decided not to invest any more money, make a capital allocation decision to be careful with how they're spending money, and investors are all worried and selling the stock down. So to me, I'm looking at this saying, wow, if I'm looking for more kind of like, now I don't know if Elon made this decision or if Panasonic was like, no, we're not going to expand the factory next year. They were hoping to expand the factory by significant dollars next year, and now they're going to slow that down. So whether he made the decision or Panasonic forced the decision upon them, but still, they're not going to spend money that they are looking at the market and saying, wow, we're going to do 360,000 to 400,000 cars this year, maybe a little bit slower. We don't need that capacity right now, so we're going to pull back on our spending. I think it's a good decision if you're Tesla.
So here's the thing. You get into an argument with anyone about Tesla's valuation and say it's ridiculous for an electric car company to be valued where it is, and they'll just fire back at you, shaking your head. It's not a car company. How dare you? It's much bigger than that. It's an energy company. It's going to change the way we think about many different industries, right? And back in the day, they said the point of the Gigafactory is to make Tesla into something more than an electric vehicle manufacturer. The Gigafactory is crucial to helping realize the company's mission, one that goes way beyond just electric cars. So if you see the Gigafactory being pulled back on, maybe it's short term, maybe it's long term, I'm not sure. We'll have to see how it plays out. It has to make you question, what is Tesla? Is it a car company or not? Are they slowing growth in the areas that are not car related? And what does that mean for valuation?
Well, and we saw the first quarter, or the projected first quarter sales numbers are not going to look so good compared to the fourth quarter. Some slowing growth there. And maybe a lot of that has to do with the subsidies that are going to be pulled back this year. So I just think, yes, they're looking at their market saying, we don't need that capacity. Let's not spend it until we actually need it. granted, they are very forward-looking when it comes to trying to build this great business, as Ron said, in lots of different areas, not just in cars, but lots of different electric spaces. So trying to figure out how to allocate capital when capital allocation and capital need for Tesla is a critical issue that investors focus a lot on. They're not going to spend their money right now.
And guys, Jeff Bezos, Amazon CEO, is out with his annual letter to shareholders, and he's feeling a bit feisty. This is a quote. "Today, I challenge our top retail competitors, you know who you are, to match our employee benefits and our $15 minimum wage. Do it. Better yet, go to $16 and throw the gauntlet back at us. It's a kind of competition that will benefit everyone." So that's from Bezos, and it didn't take long for Walmart to respond. This is Walmart's executive VP of Corporate Affairs, Dan Bartlett. He shot back, "Hey, retail competitors out there, you know who you are. How about paying your taxes?"
Woof.
Whoa.
Andy, what do you think?
I mean, I love that kind of conversation and debate. And I mean, obviously, Jeff Bezos he's a very aggressive competitor, probably one of the most competitive CEOs out there. And he went out there very publicly in his space. And in a letter, by the way, that had lots of good information in there, not just this. There was a lot of good stuff in there.
And I should clarify that in 2018, Amazon paid $0 in U.S. federal income taxes based on $11 billion in profits. And that's because they had we had the tax cut, we had carry forward losses, tax credits. So there are multiple reasons, but they did not pay anything in federal income taxes in 2018.
Yeah, compared to the likes of Walmart that pays a substantial amounts in taxes and has for years and years. So, I think he's throwing this gauntlet down because he cares so much about how they pay their employees, and to come out boldly like that, hey, this is the way that Jeff Bezos kind of rolls. So I kind of like, and I applaud Walmart for getting out there and throwing it back at him.
Yeah. Besides from that, my takeaway from the letter was that he wanted to give himself cover that he's going to be trying some big and bold things in the future, and they're not going to all work out. And some of them might lead to billion-dollar losses or $100 million losses, like the Amazon Fire Phone. And he doesn't need to give himself cover. He can do what he wants, but I think he was just warning everyone, especially if you're going to own our stock, be prepared. I'm going to be making some big bets, and they're not all going to work out.
Yeah, and to that point, Ron, I love this language, and it just shows you what a position of strength Amazon is in. And here is his phrase. His phrase says that he said that we will, quote, occasionally have multi-billion-dollar failures.
Yeah, and hopefully you'll have more multi-billion-dollar successes that will offset. Otherwise, things are going to go badly quickly. But he's just warning, we're going to be making some big bets.
Buffett has talked about that. Warren Buffett has talked about this at Berkshire Hathaway. When you get that big and you have that much capital, and to move the needle, you can't just go picking around the edges. You got to swing for the fences. And I mean, Bezos has. He talked about the success they had by the third-party sellers in the market in his annual letter. So to move that needle forward of Amazon, he's got to make those bets, and they won't all work out. But those that do, his history is pretty good that it creates a lot of value for customers and for shareholders.
Well, speaking of bets that may not work out, our final story, a story that we are so excited about. Is that fair?
You are so excited. No, we are all excited.
I know we're all Grease fans. Let's lead with the truth. Complete transparency. Well, Paramount is working on a prequel to the movie Grease. The prequel will be called Summer Loving. Woof. Okay, so for some context
here. Is it Lovin' or Loving?
I think Loving.
Loving, not apostrophe.
Yes,
okay.
yes.
Okay. All right.
Okay, so for some context, Grease, the original movie, comes out in 1978, earns $190 million at the box office. Adjusted for inflation, that's almost $700 million today. Okay, so that's a big number. Grease 2 earned only $15 million. Adjusted for inflation, well, it's still really bad. I don't know what it is. Okay, so Ron and Andy, we're all big fans of Grease. Why mess with perfection?
All right, so
well, they already did mess with perfection. They messed it up.
All you have to know is that Grease 2 is based on bowling.
Is that true?
Bowling was a big part of it.
I never saw Grease 2, and I will not see Grease 2.
Instead of the big drag race, I think there was a big bowling competition, but I could be off on that. So Grease is based on a play of the same name,
Yes.
right? And back in my younger days, I was a bit of a drummer, and I actually played the drums for this show in college. The theater department put on a production, and I was the drummer in the pit band. And so I literally know every note of every song, every lyric of this show, and it will always be near and dear to my heart. And the movie I thought was absolutely fantastic.
Perfect.
And especially for the age I was in with, like, you know, it was kind of the age of Happy Days and the leather jacket and Fonzie, and then these guys Zuko shows up with his leather jacket and Kaneki. It was amazing.
Kaneki is great.
Kaneki and Rizzo, the two most underrated characters, you think? I mean, Ron mentioned Duty earlier, and I'm like, I don't know. I'd forgotten he was even in it.
No, he was part of the Thunderbirds.
No, I remember him now.
Yeah.
Yeah, that's good. Andy?
I like Ron's talk. I was just, I mean, Olivia Newton-John. I mean, like Sandy's character for me, you know, right up there with Farrah Fawcett in late 70s.
Tell me about it,
like,
Steve.
I was just,
Tell me about it.
Just hopelessly devoted to Sarah.
It was good stuff.
You know,
Sandy there.
You know, speaking of, this will probably not shock you. I was a big Olivia Newton-John fan. And when I was a kid, I collected autographs and collected primarily baseball and football autographs, but celebrity autographs too. And somehow my older brother and I had this address list where you could write celebrities. It was usually through their agents or their publicists. But I was probably 10 years old. I spent the better part of a day writing Olivia Newton-John. And I was at our table, and I was just writing.
I'm so sorry, man.
I was writing Dear Olivia, and I had some photos I had torn out of magazines that I was going to have her sign. And my mom is a saint, and I spent probably 2 or 3 hours working on this letter. And I remember my mom finally coming in and basically saying, "That's enough."
Oh, Ms. Greer, you're a good woman.
I think you need to kind of get outside. You need to let it go. And she was right. Yeah. And I know that your job as a parent is to worry about your kid. And I probably was a little unhealthy in my kind of obsession.
Very devoted.
But I will say I've got autographed photos of Olivia Newton-John somewhere.
Now, you know the question that people may have about, like, you know, your early Elvis, or you kind of like late fat Elvis like fan? Like, were you Sandy early in the movie fan, or were you Sandy late in the movie fan?
It's a great question. Well, I will tell you that I was Olivia Newton-John, Have You Never Been Mellow fan, and that predates Grease.
Yeah.
Okay. So then I gotta say I'm probably Sandy. I'm early Sandy.
Yeah. When Frenchie got her and helped her, you know, leathered her out a little bit, and, you know, used her beauty school background. Yeah. That was special.
I'm just glad she didn't give her Frenchie's hair. That's what I was worried about.
Now, can we agree though that the ending is really bad when they fly off in the car into the air?
Terrible. That would never
that's
happen.
like, you got to rewrite
happen.
that. That's ridiculous.
So here's my idea for a Grease movie, if you're going to do it. Okay, it's Grease the later years. And you have them. So Zuko is now around 60. Yeah. Olivia Newton-John was actually older when they filmed Grease, so she's around 70 now. And it begins with like Danny and Sandy at Home Depot, and they're getting frustrated because they can't get someone to help them. And then maybe you cut to them like talking asset allocation. They're nearing retirement. They're having a debate about fixed income versus equities. Come on.
Does Travolta have a hair? No hair?
Yeah, and there's nightlife. They've got like a low-speed vehicle or a golf cart. There's some socializing.
Prius.
But it's more realistic, and they talk about their health maladies and all of that.
All right, back to the original. I'm a fan of the idea of a prequel, but it's all in the execution. It could be amazing.
Oh.
It's likely not going
It's
to
going
be.
to be now the summer before they rediscover each other.
Give it a chance.
No, you can't.
Do you think is there going to be music?
I don't know, but you're messing with perfection. I don't need that summer spelled out for me. I mean, I know
our engineer is so bored.
Yeah, it is. Okay, well, let's. Speaking of Dan Boyd, you're of a different generation. So, what do you think of Grease? And then follow up question: what do you think about this discussion we just had?
Grease is a movie, and I've seen it. It has songs. Some of them are good. Some of them aren't as good, and I've heard them. I happen to share a birthday with Olivia Newton-John.
What day is that? What day?
September 26th.
Oh. Nice.
The Christmas in September,
I'm sure Mac knew that right off.
And is this the best podcast you've ever heard, or the greatest podcast you've ever heard?
Anybody who knows Mac Greer understands that he is a rabid fan of 70s TV and film.
True.
And as a person who was born in the decade after the 70s, I have no connection whatsoever to any of it. So this discussion for me has been both interesting and titillating.
And Dan, have you never been mellow?
I'm feeling pretty mellow right now, Matt. Thanks for asking.
Okay.
I think we've done it.
Okay, good. Okay, so the desert island question. Here you go. As we wrap up, if you're on a desert island for the next 5 years, you're looking at one of these stocks. What are you going with? We've got PagerDuty, terrible name. We've got Lyft. We've got Tesla. We've got Amazon. And let's throw in Grease, the prequel.
I'm going to say PagerDuty. Here's my prediction. I think within 3 years, Atlassian will buy PagerDuty.
Oh, that's interesting.
And change the name.
And change, well, won't,
They'll
yeah,
have to.
change
Good.
the-
I'm sticking with Bezos and Amazon.
Okay, well, you can always email us at marketfoolery.fool.com with your questions, your comments, your flames. Let us know what you would rather see. Summer Lovin', a prequel to Grease, or Grease, the later years. Sunset Loving. Andy, Ron, thanks for joining me.
Thank you,
Thanks,
Mac.
Mac.
Always a pleasure.
As always, people on the show may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. That's it for this edition of Market Foolery. The show is mixed by Dan Boyd. I'm Mac Greer. Thanks for listening. Grease is the word.
I saw my problems and I see the light. We got a loving thing, we gotta feed it right. There ain't no danger we can go too far. We start believing now that we can be who we are. Grease is the word.
Okay, that was great, but you have got to be kidding me that you think that people would want to watch Retirement Home, Olivia Newton-John, and John Travolta.
I didn't say Retirement Home.
Go around
I didn't say Retirement
complaining.
Home.
Listen, do you know the success of the Golden Girls back in the day?
I am aware that it was a successful show.
Golden
Yes.
Girls is a big hit.
Okay.
Sunset Lovin'.
You added the phrase retirement home. They're in their 60s, so they're
Not
planning
yet.
for retirement.
Maybe a retirement community.
No, you said going around in a golf cart though.
A 55 and
You
older
can, you don't
community.
have, you can have a golf cart and not be in a retirement home.
Sharing